please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, this is the show where we'll highlight all the buzzing stocks of the day. Also, we'll give you some expert advice on how you can capitalize and trade. Well, it's a Friday morning, but it's red on the screen actually. Mangalam, today we have had a pretty good week, a good run in the recent past, 10,000 to 10,550. We're on the verge of going to 10,600. But today it appears we're taking a bit of a break and some money being taken off the table. Metal stocks did phenomenally well yesterday, but today, in fact, we are seeing some minor profit booking.
Absolutely. Some minor profit booking is the word that best suits the sort of environment that we're seeing. But beneath the surface, while we're seeing profit booking on the metal stocks and PSU banks, they're not doing too well. The IT stocks, they've been the flavor of today's trading session. In fact, for a very long time right now, the mid-cap IT stocks, they're buzzing. Of course, led by good results come by from both TCS and Infosys and Mindtree. And the rupee being about at a 13-14-month low also helps their cause. So if you take a look at NIIT Tech, Mindtree, Hexaware, in fact, the top 3 of the top 5 F&O gainers, all of them are mid-cap IT stocks. All that and more later. First up, all the top stories that we're tracking at this point in time. IT bellwether TCS reports the best dollar revenue growth in 14 quarters, beats street estimates on most parameters, also announces a 1:1 bonus. Management tells CNBC TV18 that their focus is to get to double-digit mark in constant currency growth.
And IT stocks, they surge in trade as the rupee breaches the 66 mark. The Indian currency hits a 13-month low on the back of unexpected hawkish minutes of the Monetary Policy Committee that are declared.
Everready, that one cracks 10% as the company is hit with a 171 crore rupee penalty imposed in a cartelization case by the Competition Commission of India.
And there's some pain for paint companies like Berger, Asian as well as Kansai Nerolac as crude prices spiked to $74 per barrel.
Fortis continues to be in focus. This time the board approves evaluation of binding offers and the formation of a panel to evaluate rival bids. A fifth suitor enters the fray. KKR-backed Radiant has entered the acquisition race now.
Okay, all right then. The Nifty is down only around 20 points approximately. But you pull up a contribution chart, you'll see if not for these IT stocks, well, we would have been down close to around 40 points or thereabouts. So we're down close to 16 points. You pull up a contribution chart, you'll see Infosys, TCS, HCL Tech. You put them together, 50 or 45 points are coming in only because of them. So now, if it wasn't for them, we would have been down more than 50, 60 points odd, but that's just a way of looking at it. Ashwani Gujral joins in. Hi, Ashwani. Good morning. It's a Friday morning. How do you trade the Nifty? Second half of trade, we could see a pullback, or do you think, in fact, it's going to be that sort of a day when we see some red on the screen?
See, Nifty is split into two halves where, IT is holding it up, but banks are taking it lower. My bigger problem is that if you see X of banks, it's not like, majority of the sectors are in positive. The majority of the sectors are red. So if you see the overall market texture, it's more towards the weak side than the strong side. So my sense is mid caps, other spaces, FMCG, etc. Today seems to be a bit of a profit booking day. I think, the Nifty, I may not move a whole lot because you have counterbalancing forces. But I think the clear trade is on the bank Nifty, where, as rupee weakens, inflation rises, and you have now hawkish tilt, etc., being priced in. And particularly on banks, PSU banks are coming under the hammer because every day we hope that the yield will come down, but it keeps going up. So my sense is that still a good time to get short on bank Nifty, and possibly you'll have a further downside. The Nifty may not break 10,500. That appears to be the case. But overall, I think through the day, maybe more weakness could be in store because global yields are also higher. Having said all that, for the moment, Union Bank is a sell with a stop of 96, target of 88. Canara Bank is a sell with a stop of 275, target of 262. And NIIT Tech is a buy with a stop of 950, target of 985.
All right, Ashwani, you're speaking about all these things, but can't let you go without asking you about Radico Khaitan. It's a Friday. That stock has suddenly resumed its uptrend at record high, 16% this week. More to go?
See, incidentally, this was our 914 call, and it's just broken into new highs. So it just took off yesterday, and there is continuation here. Obviously, a bit of consumption is coming into play. So I think today could be another good day for liquor stocks.
All right, good day for liquor stocks, good night for liquor drinkers perhaps, because it's a Friday. So we'll keep an eye out on that. But let's focus on the metal space now. NMDC, the management is standing by. They've cut their prices on both fines and lumps by 100 rupees. The stock is at the low point of the day, 100 rupees per ton. That is. To discuss more, we are joined by Mr. T.R.K. Rao, the director of the company. Thanks a lot, Mr. Rao, for joining in. Remember you joining us just about 2 weeks ago, and that time you said that yes, local miners have cut down the prices, private miners that is, and you are reviewing the situation. Now that you've reviewed the situation, cut the prices down by about 100 rupees per ton, can you tell us what exactly led to this? Was it oversupply or maybe to push sales volumes? And going forward, are more cuts likely?
Yeah, as we had told last time, the year which has gone by for NMDC was the best year. NMDC registered the best ever sales in its history. We ended up the year last fiscal with 36 million tons, and the last March, the March 18, was also the best ever month for NMDC. We did around 3.8 million tons. We had a very good volume growth in the month of March. But when we see the April first 15 days, because of the price corrections happened in Orissa, where the Orissa miners have reduced prices by around 6%, and the international price also have come down from 1st of March to the April 15th by about 21%. And there has been supply side pressures also. And since there has been a dip in our volumes in the first 15 days, so in order to catch up with the volumes and to retain our market share and expand it, we had made a correction by reducing around 100 rupees per ton, which equals around 3% of the reduction in prices.
Hi, Mr. Rao. Good to speak to you, sir. You're telling us that, in fact, the international prices were down by around 20%, but Odisha miners, how much did they correct prices by?
Around 6%.
Around 6%. All right. So let's compare. Let's compare this now, Mr. Rao. NMDC's prices. Compare it with the Odisha miners as well as international prices. What is it? What kind of a discount is it at? What kind of a premium is that? If you could give us some clarity.
Yeah, our pricing varies from clusters to clusters.
Okay.
In the sense that if you compare on East Coast our prices are lower by 21% compared to imports. And when we go to the West Coast, our prices are lower by 4% compared to the imports.
Okay.
And when we go to landlocked plants like Jindal, our import discounts are around a 30% premium. And we are also quite cheaper compared to Orissa. So,
Mr. Rao, the short point we are trying to get at is that NMDC's pricing is still competitive. It's still cheaper than imports, correct?
Absolutely.
Okay.
The goal of NMDC is to retain the volumes and maintain the optimum price.
Superb. So you're giving us that point. So, but what about in comparison to other domestic miners? What is the pricing over there? Are you at par? Are you a little more expensive? Because your real competition, sir, will come from the domestic miners.
Yeah, when you talk of domestic miner, the competition is with respect to Chhattisgarh. But in Karnataka, I don't have competition from Orissa miners. So it varies from cluster to cluster, as I had indicated.
Okay.
So where we have to correct prices in line with Orissa, that is in the Bailadilla sector. That's called the Chhattisgarh sector.
Okay.
So accordingly, we have done that.
So what's the price differential again between you and the Chhattisgarh Orissa miners?
No, almost we are on par with the landed cost basis. On landed cost, the Orissa miner and the NMDC, slightly they are more or less equal. Not much variation.
At par.
All right. So
compared to imports, we are quite cheaper.
Okay, you're not giving us the exact details there, Mr. Rao. Okay, we'll keep an eye out on what you're saying. But let's talk about the volumes. Then you said that you are trying to reduce your prices and increase your sales volumes. You had said that FY19 volumes are expected to be around 38, 39 million tons. In FY18, 36 million tons.
Yes,
do you think you have achieved the 36 million tons that you had projected in FY18, and FY19 projections, they stand?
Yeah, we have already achieved 36 million tons in the year which has just gone by. And this year, we are forecasting around 10% increase in volumes, which will be around 39 to 40 million tons. We will surely achieve that target.
All right. You're not fearing, sir, that, some of this, I mean, there's a lot of supply that's coming back on stream. So you say that even with that supply coming on, some of these captive mines will start producing iron ore. Still, you'll be able to do 39 million tons. You're confident, right?
Yeah, absolutely.
Okay.
Yes, market is very good.
Okay.
The domestic steel market is doing very well. All our customer volumes are increasing.
Okay. All right. So that's good news,
quite
sir.
Optimistic on that.
Okay, that's good news that you're guiding for a 10% increase in sales volumes as well, sir, and you're looking quite confident as well of doing that number. So we'll take your word for that. The other point, sir, that made the street a little uncomfortable in the last 1 month was that you all had called for a meeting for dividend. You all didn't declare a dividend at that point of time, but later on you all did declare the dividend. So your shareholders will be happy that finally you all decided to declare dividend. We wanted to ask you, sir, is there any particular reason at first thought you all didn't declare that dividend? And also, very importantly, sir, if there is some kind of penalties that could come upon NMDC, because there have been some amendments made to the Mining Act. If you could give us some clarity on that.
No, that because of those penalties, we were debating whether they are applicable to NMDC or not. That's why there was a slight delay in declaration of dividend.
What penalties are those, Mr.
Finally,
Rao?
we had declared dividend.
Mr.
Yeah,
if you could tell us
there
what,
was
and the
whether the
content?
particular whether the particular judgment is applicable to the NMDC or not,
Okay.
whether the government of India is contemplating an amendment to that or not.
Yes.
These were the deliberations we undertaken. That's why there was a delay in declaring a dividend.
Okay.
But we had finally declared a very good dividend. And then the government of India is looking into the matter of those imposition of penalties for the entire country. So we are waiting for that.
So the government of India, you're saying you still don't have clarity whether or not NMDC will have to pay these penalties. What is the quantum of the penalties? Do you have a sense, sir?
No. The government of India is examining the whole issue of penalty.
But that could be a possibility?
There is no question of clarity. The possibilities are there. They are re-examining whether it is to be reviewed. The government is reviewing it.
Okay, so the quantum in your earlier assessment, what is the quantum of these penalties that could come by?
No, we are computing now. That should be around. We can't just give you the
just
number.
A ballpark number, sir. If you could.
The final decision comes.
Just a ballpark number, sir.
Share that. No.
Sorry, can you say that again? Sir, I think we lost your audio there.
Unless it is firmed up, I don't want to hazard any guess. We are only waiting for the government clarity in this.
All right, so we're still waiting for clarity. Just to tell our viewers, sir, this is with regard to the amendment of the Mining Act, right?
No, this is with regard to a Supreme Court judgment pertaining to imposition of penalties on the certain mines having environmental clearance but producing more than that. There were certain issues raised, particularly with reference to Orissa. This was pertaining to that.
Okay, all right. Mr. Rao, you're giving us some clarity, and the stock has recovered a little bit from the low point of the day. But domestically, prices have been all over the place. Just want to talk quickly about your exports. You're expected to do around 3 million tons of exports, as you told us last time. What is the difference, sir, in the margins for exports? Do you see, since international prices have corrected by 20%, as you just told us, will there be some compression in margins of international exports? I mean,
no, actually, this year our exports have not yet begun because we are normally that agreement with the long-term agreement with Japanese and Korean steel mills is to be renewed. So this quarter, first quarter, there may not be any exports.
Oh, there may not
only
be exports.
In Q2, we will have the exports.
All right, fair point. Thanks a lot, Mr. Rao, for joining in and giving us all those details. We'll definitely keep an eye out on the future rate as far as the rates are concerned, and definitely the penalty that he is talking about. Some clarity, if that emerges, maybe perhaps would take give some. What do you say, clarity to the street maybe?
Absolutely. No, Mangalam, so the street was a little nervous on that front. So as Mr. Rao has clarified that, we'll have to wait by it to see whether or not NMDC will have to pay any kind of, penalties over there. But important points from this particular interview that all our viewers should note at. 39 million tons, they're confident. Still, the pricing is competitive in comparison to imports. And importantly, they believe that they are on par with other private miners.
All right, so let's take a short break, come back, and we will get you an excerpt of the conversation that we had with the Steel Secretary on the impact of US trade tariffs. We'll keep it with the metal sector. Stay with CNBC. Keeping with the metal sector, Kevin Lee, our colleague, caught up with the Steel Secretary Aruna Sharma to get a detailed understanding of the impact the US import tariffs imposed by Donald Trump. Here's a slice of that conversation.
We don't want any market internationally to be close to us or putting India steel exporters to a disadvantage. So presently, through Ministry of Commerce, it has already gone them to extend that exemption even for India, because we are in no way security hazard to be clubbed under 232 tariff ban. So let's see what happens there.
And ma'am, speaking a little bit about insolvency cases, now 4 out of those 12 accounts that the RBI had recommended for the insolvency process are steel companies. We've seen quicker resolution in these companies compared to some companies from other sectors. I know what answer you have in mind and what you're going to say, but let me ask you specifically on a company that has completed the process. Electro Steel has become the first company to complete that resolution process. Can we expect the capacity of these steel companies that were under other promoters first to go up, and can we see a significant ramp up? Is it going to affect the steel sector in India in a positive way because they're with new promoters?
See,
now?
What you have said is that one of the company has completed the process of NCLT. There are few more formalities it has to undergo with. So let's wait for entire formalities to be over. And we are very sure that any new label which will be coming to Electro Steel will be running it efficiently, because they are the only one who make DI pipes. And more steel in the pipes will be going in the market. There will be a potential of using them for sewage, drainage, for water before filtration. So the market is a big potential. So any wise businessman definitely must be having some plan of expansion and efficiency productions.
You mentioned earlier that steel sector has seen an uptick from 2016-17, and this should continue for the next few years. You also mentioned that even these companies which are under the insolvency process are still producing steel because now it's profitable to produce steel. But can we see a significant increase in their production capacities once they are taken over by new promoters?
They are running lesser than their capacity. So there is a scope to expand in the existing capacity. And definitely the new promoter looking at the markets will have a plan for further expansion, because they have good facilities, the plant is running well, good quality plants. So we are very optimistic about it.
And about the ultimate mission to reach 300 million tons of capacity?
Should not be a problem. We have already reached 134, which we did not expect to reach within 1 year time. So we have reached 134. We will reach 150 by 2020.
All right, then. Steel Secretary is sounding confident and optimistic as always. But before we go into a short break, just pull up Tata Elxsi. That stock has moved higher. In fact, it's moved virtually to the high point of the day. Motilal Oswal, one of their focused dynamic equity fund, that particular fund's name appears in the 1% plus holding, and this is the first time that we're seeing it as per the March 2018 disclosure. So I just thought we'll alert our viewers as well. The stock has been trending higher. In the last 1 month, it has gained nearly around 15 to around 16%. So just keep that in mind, up close to around 15-16%. The name appears for the first time in the 1% plus holding. Well, I'll tell you what, we'll slip into a short break. When you come back, we'll get you analysis of Reliance Jio and its impact. Now, earnings season has well and truly kicked off. Telecom companies will start reporting their numbers from next week, with Bharti Airtel opening the proceedings on Tuesday. Reema Tendulkar is with us with what we can expect and how Reliance Jio is impacting the landscape. Reema, over to you.
The last 18 months have transformed the telecom sector. We're talking about the time since Reliance Jio launched its telecom operations. Since then, voice calling has become free. Reliance Jio was the first one to offer lifetime free calling. Earlier, the industry generated close to about 75% of its revenues on account of voice. On data, that's become the focal point of competition. India is now the highest mobile data user in the world. We consume close to 1 billion GB of data per month. It's not just the volumes which have shot up. Prices of data have come down. In 2016, the price of 1 GB of data was 152 rupees. Now it's come down to 10 rupees per GB. This chart will show you that the prices of data have been coming down, but they saw a seminal fall in the last 18 months on account of Reliance Jio launch and because of the bundled offerings that it came out with. So from 375 rupees in 2013, we're now down to 10 rupees per GB. This is bad news for telecom companies. On account of these price offerings, the financial position of the telcos has been challenged. Bharti is likely to post its first quarterly loss in the last 15 years in the March quarter. That's next week. Idea has been reporting losses for the last 5 quarters, likely to do so even in the March quarter, according to estimates from Kotak Institutional Equities. All this means good news for consumers. According to an Institute for Competitiveness, the savings to the consumers would be to the tune of $10 billion. And on account of, there's so much data, India has now surpassed US in terms of app downloads, second only to China. It's quite likely this competition is going to continue because Reliance Jio's stated goal is they want to provide 20% more value to its consumers compared to competition. So every time the competition comes and matches Jio's offerings, they could cut it further, only weakening the market and the pricing power of the incumbents. They've also stated that they want to hit a market share of 50% from their current 20%. This means that 5G offtake may just take some more time. It took India 4 years to transition from 3G to 4G, but 5G may take some time because the infrastructure for 5G networks will require a lot of investment. COAI estimates that purely meeting the network requirements of the industry is about $10 billion per year for the next 5 or 6 years, and banks are unwilling to lend to incumbents who are already sitting on a massive amount of debt. So we'll see how that 5G story plays out and whether the spectrum finds any takers. But for now, the industry has gotten disrupted on account of Jio. We'll await the numbers from Bharti and Idea in the coming few days. Just one disclaimer, Reliance Jio is owned by Reliance Industries, the parent of Network 18 and TV18, which operate CNBC TV18, the channel that you're watching.
All right, telling data that, Rima, especially as far as the consumption trends are concerned, we'll keep an eye out on that, especially Bharti's results likely to make a loss for the first time in 15 quarterly loss for the first time in 15 years. But with that, we've run out of time on Chartbusters. Stay tuned to CNBC TV18. Trading Hour comes up next.